Hey guys, good afternoon. We're doing a quick market wrap. So today we got the Trump announcement that he was going to tariff the European Union 50%. So the market had that knee-jerk reaction to 1.25% of the daily range. And then right here, 1.25. So we have several different daily ranges I can do. R vol, H vol, open and close. The 8:30 to 5:15, the full day use instrument settings. There's different ways to capture your data, and each instrument has its own unique data set that the market trades in. So it is an ETH trading template for the daily time frame. And then you can set your own either 24/7 or, like I said, 8:30 to 5:15. And then you can calculate on open and close and 1 and 14 periods. So you can pretty much model any type of distribution and time period that you would like. So these are my standard settings, and you can see that when it left it left the R vol first, broke through the H vol, broke through the twos, and then the threes hit the first tail and sort of bounced around, came back up, and then went down to the 1.25 of the daily H fall on the open. So we came all the way back up to the daily one, which was a good sign of, the knee-jerk reaction was over. Market had a chance to rethink and, actually realize that it would be a really good thing for United States companies and equities in particular if this negotiation can work out, hopefully to get less restriction of our products overseas, allow our cars to be sold in Europe, allow our companies to go over there and engage in their markets as freely as they come to our markets and engage. And then the less regulation, that's going to be key. They're very onerous and they are very controlling. They'll slap a fine on you or, you know, grab your bank account or do all kinds of crazy stuff. So that can't be tolerated. So you have to have an open um, playing field if you're going to allow the United States company to come over there. Our jurisdictions in the United States are going to have to abide by, I think, our laws. I know that we go over there and respect their laws. I mean, I'm not trying to rewrite their laws, but they've gotten away with a lot as far as, the overregulation. They have held our tech companies up for hostage quite a few times on those antitrust cases and other things. We won't get into all of that, but there's a real chance that we can get some of that resolved, and it would make it a better environment for U.S. equities. And I think that's why the market is just relaxing and coming back in. Unfortunately, though, as I mentioned this morning, we have the JAGQX. So Trump did Jamie Dimon a huge favor and it gapped down off of that level. So Mr. Dimon wasn't going to want us to get back up there right away. We've gotten away from his short call. So the temporary hedge up to the monthly 3 is off, or we're back below it. They don't have to hedge that any longer unless that hedge is there through the end of the month, which is next week, and they don't want it to be challenged again. You know what I'm saying? Once it gets back up and the market gets exuberant, it can really take off. So that would be very expensive for them. So he would prefer to keep that below that red line. Thank you. At least through the end of the month, because those hedges are, tied to those. I guess, I'm assuming monthly contract. It could be um, a different time frame. It could be OpEx. Who knows what they're doing? But I'm assuming the end of the month. That makes more sense. It's an institutional agreement. So but we do know that that is our tailwind right now, right? We're going, or our we're headwind going back into it, like salmon swimming upstream trying to hit that line, and there's a big bear there going to eat us, and that's Jamie Dimon. He's going to eat all the orders that go up there. So, but a really positive thing with the VIX, we got to the 37-day, excuse me, the 23-day mean, and came all the way back down from the 23-day. And it got off that 23-day one up there. Here's the 37 and here's the 30. And then way up here, we have other periods that should something, come out and it gets a little bit more heated next week. But yeah, volatility is on the upside a little bit, and it could stay elevated next week, so we have to be on our toes. What I wanted to show you something today is a little bit about the Jats volatility framework. You can set the oscillator. This is set to a daily H vol R vol, and you can see that my orange 3 for H vol is 79.50 points, and then that R vol broke above it, came back, broke above it, came back, and then broke above it again, went to 109.75. Well, you can divide 109.75 into 79.50 and get 138%. So we measure from mean to 3 is 100%, right? Instead of the full distribution, it would be 200% for the full distribution, but going from mean to 3 would be 100. So if you have 138% for your R vol to H vol, you can set the Jats PT levels to 38% right there, 0.38, to go below PT3, and that takes your distribution right there and your target reached, right? So you can set a level once you're outside the H vol with the R vol on your algo to reach it. I mean, we use standard levels, 25, 50, 75, 100, because let me show it to you. When we're measuring mean to 3, right here, I've gone through this a few times. So there's one time mean to 3. If you were to take this and divide it in half of that, oops, wrong one, sorry. Sometimes it's like I'm on asleep and on automatic pilot. I don't sleep very much, so I'm a walking zombie most of the time anyway. All right, so here we've got this one time. So here would be 125. And if you put it 2 times, that's going to be 150. So, or 1.5 of the range, right? So if I put the distribution, the next tail below it as 0.5, there it is. So you can see that 1.5 times the distribution is a very standard, range. This is not ATR, but it's the same concept. If you go back and look at that CBOE variance trading calculation on the FAQ, how is the VIX index calculated? And you look at your Black-Scholes model or any of your pricing models really, you're going to see that it's the 2 times the price. That 2 times the range is what they recommend for your risk, 2 times sigma, right? 1 time would be the relative vol, 2 times is the, if you carried your risk out to 2 times, or 1.5 and 2 times, you get your spreads. So if you're going to sell premium, you would want to tuck it either, 1.5 and 2 times. So 0.5 and 1 would actually, 1 would be 2 and 0.5 would be 1.5 because they're going out from the mean to the 3. So there's 2 times the range, here's 1.5. But you can put it wherever you want. If you wanted to do Fibonacci, if you wanted to do 10, 20, 30, 40, 50, you can put it wherever you want. If you're sitting there seeing that your R vol is above your H vol, just divide it, right? 109.75 divided by 79.50, get your sum, and then plop that in as a 0.38, or if it's above 100%, then, or wait, back up, above 200%, then you would go into 1.25. So you can increase your sigma out as much as you want. This is not standard deviation either. This is why it's so confusing to people. I'm doing a standard deviation of volatility. This is a second order of volatility. I'm doing vol of vol, a variance vol of vol model. And it's scaled to 100, which just makes it super easy, right? So we can understand what we're looking at. No more indicators that you get and you have no clue what they are or what they do. I can't give you my calculations, but I can explain it so that you can easily understand it and learn how to adapt to it and use it. Because this works on all time frames, a 60-minute chart, a 1-hour IB chart, an RTH session chart, a daily, weekly, monthly, quarterly, whatever. 6 months, it works the same, okay? And you can figure out where these ranges are on these higher time frames, weekly, daily, 60-minute, and start preparing how to trade the strategy here. The 6B is going outside the range of the quarterly, and it's actually breaking through the monthly ones. So it was trapped inside the monthly ones today. But it's the same concept. If it's going to be inside the ones, that is their, delta neutral. And if it leaves the 1, where does it go? It goes to the 2 or the 3. I mean, you see right here, it's all the same. All instruments. Are you getting chills? I'm telling you, crypto, crude, gold, this is all the same. So it's vol of vol, variance trading model. Jats PT can help you plan whether you're going to go in or out. And the best thing on different time frames, on quarterly, on monthly, on weekly, you know, um, look, we've got a tail right here. So we can put a 25% on there. Oh, we already have it. Okay, it's up here. But if you wanted to do a 0.14, 14%, or here, this is a 0.10. There we go, 10% of the range outside. And we can see it hit 10% here, it hit 10% here. It went so you can get your, currency may like that 10%. and they lean on the algos. So you can figure out their moves and anticipate them the next time. See what I'm saying? And when you have this, you can access the plots. You don't get the code, but you can access the plots and run your own code, Python, Java, whatever you use, NinjaTrader, C+, or, you know, do a Bloodhound, Blackbird code, whatever is easiest for you, and learn how to put these models together. That I give you these higher time frame levels, daily, weekly, 60, 15. You can put RVol in one and HVol in another. This is all HVol. You know, right click and export it to Excel, and then import your Excel spreadsheet into Grok or into ChatGPT and have them run an analysis of RVol to HVol. You can do your own skew analysis across time frames. If you wanted to do, 30-minute, 60-minute, 90-minute, 120, 150, 180, 360, all the way up to, whatever the closing bell is. You can do it that way too. 30-minute bars skew. Um, there's so much that you can do with this. So, and it's easy to understand. I mean, I think I've laid it out for you that if you've been trading a while, you already get it. So, but the CBOE is very particular with their 23, 30, 37-day calculations. And when I realize that this variance volatility model matches what they do, and they're using options, right? They're using SPX. I'm just using my code for my variance trading methodology. And it works pretty well. Gets me to the level, gets me executions, and you can park it inside the range. You don't have to go exactly to 100%. You can go to 95%. You know what I mean? Little bit of a cheat there to just make sure you get filled. You're in control of offsetting, the signal if you know what I mean. So, but yeah, it's all good. Hopefully the market's not going to just, eat all of our great progress that we've made so far and backtrack. I know that the media has been pushing them to do it. I know that the yields were being forced higher, and a lot of that has to do, in my opinion, the repo market. They need to get, we had a 20% move from April until today, and I think they would like nothing other than to have the market slide all the way back so that they could say before the end of the month, look, it didn't really matter. It came all back. And their 5% held up or whatever. You know what I'm trying to say? I think they were getting 4.5 and the market moved 20. But there's a lot of that in play. They got egg all over their face, and so did the financial media. It's almost like they were begging the market to crash, and that is so un-American and shameful, considering the opportunity that we're getting. Trillions of dollars coming back into the United States. Unregulation, I mean, allowing you to, you know, get a business plan, try to get something going, a legitimate enterprise to employ yourself, employ people, put forth a good, you know, opportunity for yourself. If there's no better climate than today, certainly wasn't like this, you know, through the Biden administration or the Obama administration. So, and the first Trump administration, he was hamstrung. We won't get into all that, but they deliberately, sabotaged him to, hide their own, um never mind, I'm not gonna get into all that, but, now it's the what did he call it? The golden age, so take advantage. Do, do something for yourself, but now is the time to be investing in equities. I think it's Bitcoin, gold, and equity participation should be, a lot better than 4 or 5% at the repo market. Um, we can certainly think so, with all the money coming into the country and into the market. I mean, there was so much retail investment, that came in that shook the hair off their head. They had no idea that it would be so strong. It's like everybody woke up and came back to the market, and they were all trying to plan on dumping the stocks and, ripping the U.S. economy into the crapper, and it fell flat on their face, and I couldn't be happier. I couldn't be happier. So, ha ha. All right. Before I get too excited about my, all the winning that we've been doing, we're not out of the neck of the woods. I mean, there's, a lot of people have microphones and they can say something at any one time and it would send the markets careening. So be careful. The volatility is over 20 and elevated. So, but it was encouraging to see the stability in the market recovered. And I think as people realized, that the import of, what we're trying to achieve and what had been occurring to cause, the correction or the attempt at getting a correction, there's no better time than today than try to, fix these trade issues. There's an imbalance. There's a clear imbalance between the trade to the United States and out of the United States with a lot of these countries. It's not just Europe. It's a lot of countries. So they're gonna fix that. It's called remedy, and I am so glad. All right. Well, that's all I have. I'll see you Sunday with a Globex report. Monday there's an early close noon, and then we're back Monday night. Mondays are always light on on a holiday. So it could be very light trading, or it could be just wide out volatility. I'm kind of hoping that we have a pause because we're going into the end of the month. And I don't want to see them ripping the faces off this market and trying to get it back down so that they can justify their 5%. That's what has me worried. All right, we'll talk to you guys later. Y'all have a good weekend. And um, if you have any questions, just let me know. Appreciate it.